We are going to start with a breakdown since I did forget to record London session. So I'll just do that in the form of a breakdown. Essentially, I think that this might even be slightly better. Who knows what your opinion is on that? But I will record London session for the rest of the week. I am not going to be trading tonight, overnight to Wednesday night, but Wednesday night going into London session, I will be back trading again. Up the data for the two trades. From there, I think I'll drop this at the bottom. So I'll let the data load a little bit. There we go. That's loading. Breaking down the actual technicals, right? 4 hour. Okay, so zooming out, you did see that there was a recent major internal liquidity take right here on the H4. This entire impulse move with all internal liquidity, and they choose that in order to take it. It was a major one, and after that, a strong high was formed, and this was at the very bottom, like I said, this impulse move, which ended technically right there, and you zoom in, and you had a impulse move that's liquidity, which would be strong high. As you can see, that strong high has been getting respected as well. If I go to the left here, you had also a 4 hour change of character here. You got a 4 hour change of character right here. So I'm deleting this, but this is just to show you for reference here, the 4 hour change of character right here. It was making, at the time, it was making higher highs and higher lows. This continues, but eventually price change character and showed that they were actually going to be chasing bearish internal liquidity from this point on, right? So with that being said, I highlighted the order block, which would be the last bullish candle before the drop, right next to the last candle, just the last bullish candle before the drop on the H4 as that the point of interest area, and I dropped it down to the 15-minute, given the strong high, the recent internal liquidity take, as well as the change of character right here on the actual 4 hour. So I zoomed out and I essentially looked into the 15-minute. And once I looked into the 15-minute, I did notice this big impulse move here to the left, and I noticed that this was a big impulse move down as well that respected this area. So to the left, I noticed that it wasn't an imbalance, and actually let me highlight that it was an imbalance that it didn't respect, which was right here. This one right here is that 4 hour order block, and basically this is the 15-minute imbalance that was respected. Fast forward to price currently, and we had a actually I actually this one 5 minute. Let me actually drop it. The imbalance is still valid. We go to the left here. So here's that same imbalance, but just on the but just on the 5 minute time frame. So anyways, I noticed the imbalance on 15 minute. So 5 minute. I forgot to mention that. So I went over and I noticed that I had got respected before, and I anticipated with the actual confluence here that I had. Let's see here, NZDCAD, is this you? Sure is. With the data confluence that I had, as well as the technicals and fundamentals, that this would be a good short. So they have been net negative on the New Zealand dollar for quite some time. 95% of retailers selling or buying my bad. Just to go down. Second. So yeah, bearish predicted kind of rejecting 078.253. So if you look on the H4 real quick, let's see, F78.253 is right here. It had already been traded to, basically right here. It had already been traded to in previous times. So I went down to, once again, the 15 and then the 5 minute, and basically noticed the imbalance being respected. And I did notice also that on the 4 hour, it was coming on this impulse move, since this is my new trading range. This was indeed coming back into an order block, which was in premium territory as well. wick. You can see that he came up in the premium territory and the order block directly in the territory at the strong high. So that being said, drop down to the 15-minute, the 5-minute, kind of pretty much fine tuning that imbalance. And then I noticed the imbalance respected before here on the left. And I knew that since this impulse move happened and this change of character hadn't been retested, basically, that this order block hadn't been mitigated yet, that they may come either fill the order block or fill the order block and imbalance at the same time. Initially, I had my entry up here. Well, it was a little bit down here. Had about 0.7% drawdown. I didn't really like the fact that they traded above right here. They almost traded above New York Hill Zone. So I actually ruled this trade out of the the signals, because it was a high risk trade in my opinion in terms of liquidity. So that being said, going back to the 4-hour real quick, you can see that I marked up some liquidity as well in the 4-hour, and right here in this area and in this area as well, they traded above the wicks in order to make the mitigations happen. In this area as well, and then you drop down to the actual 5-minute time frame for your entry time frame, right? I already foresaw basically this impulse movement and such like that. So I did end up calling this trade off at like a 0.6 to 0.7% loss for the learn and earn. But it was just because it was a high risk trade and there's some people with funded accounts, so I took this how I would take it, and gotta keep your risk in check. So we also had some more confluences inside the zone. Obviously, you had London Kill Zone right here, London Kill Zone right here, which is kind of like fake yellow bars. London Kill Zone right here, and then you had New York Kill Zone. It didn't trigger until the end of New York. From a higher time perspective, it triggered actually prime time for me during New York. Basically, we got into that. Actually, I did market information once I got the rejection. I basically made sure it didn't trade above. And once the price started to drop, I saw a order block formed after the imbalance mitigation and order block mitigation area left. And I decided to get in. I saw the weakness with this candle. I did market execution right there for about a 1 to 5. That was the trade right there. You also had a few more things in reference to this impulse move. The previous mitigation, that this price is going to come back. Anti-highs were also taken as well. The price is going to come back to the order block, and here's the Asian range, the blue box. Price came up and took that, and then we had the impulse move down. And I saw the trade way up here. In this area, I did notice a change of character happening right here, but price did not come back to right here quite that changed character. So the impulse was continued and eventually plateaued after chasing enough internal liquidity. And at that point, I saw price trading above these lower highs. I knew they were going to be coming from external liquidity up top into this imbalance. So I drew in all of the liquidity that I could see on the lower highs, and the last line of liquidity up to this order block. Directly and pretty obvious there. So that'll be all external liquidity up top. So I drew that in, and I expected them to do that. And once they did that in the market execution for the short, sometimes for imbalances, I'd make sure that they're not going to mitigate the imbalance and then continue up for maybe another candle close or something. In that regards, with that being said, that is breakdown number 1. Breakdown number 2 was the one I did call in actual learner for a 4% gain. Don't worry about missing on that 1 to 5. 1 to 5s and 1 to 7s are going to start to become very normal in the learner chat. So similar thing as the other trade, recent. This is the daily and 4-hour. We had a recent H4 liquidity, internal liquidity take right here. I don't know why this is a thing. I'll delete that. Basically, price was coming from an imbalance. I noticed that there was some, still some liquidity on this big impulse leg down here that basically took it. And then they're going to come up into a footprint and take some liquidity. I did notice that imbalance right here, and then I dropped down to the 5 minute time frame to see how that reflected on the other time frames. Price did come up, take Asian Range liquidity, and took out 18 session highs, and then we had London session killer starting. Also, I did see the change of character. Happen right here, basically a higher high, higher low. They failed to make a new high right here. Higher high, higher low, and then there's a higher high right here, technically speaking. And then they failed to make a new high. So they get the impulse for 5% because of the big drop. So that's a change of character. That's showing you that they're now chasing internal liquidity, and all your higher time frame liquidity has been taken. You shouldn't really be looking too much on your lower time frames in terms of liquidity unless you're getting ready to get in off an impulse happening. So once I saw the change of character, capital almost didn't have enough time, and I almost missed this trade today. Price did drop a little bit, make the change of character obvious, and then where I have the yellow dot right there, price came back up and tapped into the last supply that caused the change of character, right? Tapped into that perfectly, and price fell from there. So after it tapped into that, I was going to call it a limit order in the chat, basically while this candle was running, but there was like 60 seconds left, and I just didn't have enough time to type it, so I decided to kind of adjust and adapt because I knew it was going to be going down from here given this litigation. After litigation, the candle dropped, and I called it market execution for a 1 to 4. So you can see that's this is the supply that caused the change of character. It wasn't a bearish engulfing, but it was the last bullish candle before the drop. That caused the change of character. You can see how it mitigated it pretty perfectly for a very nice drop. So I drew that in, and once I saw that clear evidence of an institutional order fill, banks filling their orders, I had a market execution for a short right there. And you can see that I drew in at the time, and I'll do a video on this in the future, this bullish order block or demand, depending on how you want to view it. They're essentially the same thing. I drew that in, and I expected that to fail. It did. I didn't stop to break even because I knew that there would not be a retracement back up to my entry area. Because if you respected that, it could go like this, you touch the area, and then continue down from there. You know what I mean? So you have to look for blocks or demand to fail if you're short. You know what I mean? That means that supply is in control, or bearish blocks, bearish should be in this trade. So that dropped perfectly for a 1 to 4. Actually, no. And also when I came down here and actually put this liquidity right here, I secured 1%. We were running about 2.2%, and the rest is history. TP was smashed. That's pretty much that one, that breakdown. And that's goes to show you that change of character is very effective when, and the things that I've shown you so far, and it's all I've used if you didn't notice too, it's very simple trades. Actually get into this trades and make a bit of my money and actually pass the challenge, right? So with that being said, and I passed these two with one trade on that 1 to 5 NZDCAD. AUDUSD. I just bring it down. It's really not that tough, right? Due to inflation and such, like the rest of the world, and some other factors happening. But a lot of people's economies are suffering due to inflation and wars and global supply chain crisis and everything else going on in their country. So you have to just read the terminal, you can still find information somewhere else. Read the articles. There's nothing you can't find the articles that we read that we have access to back in the prime market terminal anywhere else. But what you can do is read about on investing.com about how people feel. Some stuff about the pair, the currency. Net short minus 6.8, and that's an increase from last week. Retail was 69% buying this pair, so we always trade against them. And I had bearish predicted candles for the short, and that would have been a pretty solid trade here for a 1 to 4, 1 to 5. So that's that on that. And it was the same thing for the other pair that were net short. Bearish predicted candle, retail was buying. I kind of saw it according to my trade plan for my return to the actual charts. And then obviously, very few days. And to me, it's kind of like the schematic of it. that's a very nice high confidence trade. I'm going to execute that trade when it lost because it for sure with my trading plan and the requirements for me to be able to take a trade and vice versa for buyers. You know what I mean? If I'm incorrect on the trade, my average RR is so high that it does not lose 2 or 3 in a row and then one trade and be up to 70%. So it's all about risk management and high risk to reward ratios. You know, if I'm on the 5 minute, I can do a 1 to 5 or a 1 to 8. You know, and if I am on the 15 minute, 1 to 5. So with that being said, guys, that's the breakdown. Pretty easy stuff, honestly. It's just basically what I've been teaching you to play for real. So that's pretty much that. In terms of the H4 liquidity, real quick, I seen that there were some wicks right here. Because I always like to mark up my actual higher time frame liquidity and use that as a reference for a place that price is going to finish at and have a continuation of. And you can see right here that these ended up being very relatively equal highs as well. This wick right here on the left, that was that same one wick on the H4. So you know, oftentimes in terms of liquidity, make sure you look left, and also some old Asian high that had not been taken out, so that was more confidence because they have to take out liquidity. So it actually had 2 Asian highs, middle session and current session being taken out at the same time. So this is like a super confidence trade. So with that being said, this trade, if you just repeat this over and over again and grab a funded account or build a personal account, you know, so basically, it's like a lot of people go the route of like they'll grab a funded account. 50K, 20K, 30K, trade consistent stuff like that, and then they'll take the deposit to them and then put it into a personal account. And you just go change it to your process or anything. It doesn't matter if you're building an account or personal capital. The process for taking your trade should still be exactly the same. You might be able to risk a little bit more in your personal account, but like make sure that you're relying on compounding interest to grow your account and not anything else. If you have a $100,000 account and you make let's just say $30,000 right in a month on that account, which is very then now you have $130,000 instead of being $1,000 per percent. Now you're really $1,300. Right? $1,000 now it's $1,300. Now you're getting extra money per trade. You know, let's just say you do 80K in the next several months, you know what I mean? And now you're at 200K, for example. Now you have a $2,000 1% risk and 2, 4, 6, 8, 10, you know what I mean? $2,000 1% gain as well. So if you gain 4% at that point, coming from $100,000, you just went from being able to earn $1,000 per percent to now $2,000 per percent, you know what I mean, per percent gain. So imagine doing 9% in a day and you're not even changing your process. So always remember that the only thing that matters, the only thing that changes between account sizes is nothing, right? The same trade that I took and many others took today, the same trade to make determine the money based on your risk and stuff like that. It's the same trade when you're making $100 a day. The process is a little different. The only difference is how big is your lot that you get to use in order to make actual monetary gain. That's when the compounding interest comes in. So make sure that you're relying on that to build your account. Don't ever underestimate consistent gains in your account and compounding interest because as you're able to raise your lots, you're making more money per percent gain. You know what I mean? As I just explained, and that's what you're relying on in order to kind of build your wealth. Not just like, oh, I made $2,000 today. No, you made $2,000 today, and now you get a milestone where now instead of being able to only make $1,000 per $1,000 per percent, you can make $2,000 or $3,000 per percent, right? But your lot size can increase now. So it's all about the lot size, right? The trade is it's the same. The process is the same. So when you're building a $100 account up, just the route you're going, the trade in the process is no different than somebody who is, who knows, maybe a similar strategy as you, and they took the same trade in a similar area and made $20,000. The only thing that they did different, they might have a slightly different strategy than you, but the only thing they did different other than hitting, you know what I mean, hitting sell set a limit order is being able to set the lot size at a higher lot size and actually controls the money that you're able to make as a lot size. So you should be learning to rely on that compounding interest. It's a wealth hack, right? So with that being said, I will hop off this video and I will see you guys later.